Hey, this is Chris from Stockspot, and in this video I'm going to be answering a question we get every so often at Stockspot, which is, what's the difference between gold and Bitcoin as an investment, and is Bitcoin going to be the future gold in investment portfolios? These are two assets that I've looked very closely at over the years, and I would describe as actually quite different assets, although sometimes they move in the same direction. Gold is really the most pure, original form of money. There's no counterparty risk, and it's held quite widely by central banks as an alternative form of money, and it has been for many, many hundreds of years. The benefit of gold is that you don't need to worry about getting paid by someone else like you would with a government bond or leaving your money in the bank. And also there's a finite supply of it, so it's limited in supply. And gold has historically performed similar to a long duration government bond that has inflation protection built in. And you can have a look at the chart of this over a long run to really see that gold has protected against inflation over the long run. We see it as an important diversifier in a portfolio because often when shares and bonds are performing badly together, it's when we're in a higher inflation regime, and that's when gold really holds its own. Sorry for interrupting, but I'd like to take a moment to talk about my channel. Now, most people who watch my videos don't subscribe to my channel, which means that they don't find out about other videos I'm making, and it doesn't share the love with others who are interested in investing. So if you are interested in videos like this, I would encourage you to please subscribe to my channel so you find out more about the videos we're making here. Bitcoin, on the other hand, is obviously a more recent invention. It also has finite supply and to some extent has limited counterparty risk because of the way that it's bought and sold on a distributed ledger. However, it also has some key differences. One is just around how it performs. If you have a look at the performance of Bitcoin, it's certainly done very well over the last 10 or 15 years. It's been in a period of capitalization, I'd say, as an asset class, but over shorter periods, it has much higher correlation to the NASDAQ and technology. So it's not really a portfolio diversifier. If anything, it's like technology shares on steroids. And so you're going to see in a risk-off environment, Bitcoin typically falls, whereas gold will rise. And we've seen this at the start of 2025. Over the last couple of months of this year, we've seen gold rise by over 10%. At the same time, Bitcoin has fallen by more than 10%. That's because there's geopolitical concerns around the potential implications of tariffs, and also worries about government debt and stagflation in the economy. These aren't positive for risk assets, but they are positive for gold. That said, there are sometimes times where gold and Bitcoin perform both well together or both badly together. A good example of when they both did well together was just after the COVID crisis, when central banks started to inject a lot of money into the system, as did governments. In that environment, people were concerned about a debasement of money and were also concerned about government's impact on the money supply. And therefore, both of these assets did well in that environment. But I'd say it really comes down to the overall macroeconomic environment, which one's going to perform well. I certainly wouldn't be replacing gold in a portfolio with Bitcoin. And as a long-term defensive asset, I think gold is a fantastic stabilizer in a portfolio. Bitcoin may serve a purpose in portfolios as well, but it's more as a speculative asset, more similar to NASDAQ or technology shares, and I'd be looking at it as a thematic investment rather than a core part of a diversified portfolio. And so that's my view of how Bitcoin and gold are different. I actually think they serve very different purposes in a portfolio, and although they sometimes perform in line, there's really different drivers driving the performance of those two assets.